Hello everyone, how's it going? I hope that you're having an amazing day and a very profitable time with Palantir in the market. Now, chances are, if you have decided to click on this thumbnail and to decide to watch this video, chances are you're also wondering about one question. Can Palantir continue its current run to recover to its former glories back in the heydays and then, start a new cycle of bullishness? So, as we know, over the past few years, the job market has been looking ever more uncertain by the day, and the inflation, on the other hand, has been melting people's meager savings, awaiting the economy that used to be deflationary not that long ago, combined with the Bitcoin collapse and also like the EV bubble burst and so on. So, when all is about to whittle away, we must learn to rely on ourselves and to not just play along with the uncertainty of fate. So, in order to secure our own financial future, we have to find the growth opportunities of tomorrow and then seize the ones that can really multiply our capital exponentially, increasing the money available for investment later. Essentially, we need to find a golden goose, and for many, Palantir is exactly one of those. So, really, over the past few years, Palantir became so much more than just another tech stock collecting funding in the exchange and promising that it's going to grow significantly in terms of its market share as well as the size of the overall sector. So, it is a major company that plays the role of a canary down a coal mine. It has enough clout and mystery around it to arouse the market's curiosity, and really it still does, as well as people's tendency to focus and to follow on a particular trend. It used to be data, it used to be, tech, it used to be eccentric CEO, and nowadays it's the AI. It's a company that people would often view equally as the risk appetite of the market alongside Tesla or Apple. The fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but very useful predictability that makes it a crucial stock to follow in the market. In this video, we're going to take a deep dive into Palantir and to see whether it deserves to have a place in your portfolio, and if so, when you should be buying it. Now, before it continues, if you want to watch more Palantir related content, as well as for many other companies that we follow on this channel, please take a look at my channel, down in the screen, and subscribe to stay updated to the latest. With that being said, let's jump into it. So Palantir, traded as PLTR, has a stable day in the market. It reached a high of $23.88 and a low of $23.03. Over the past 5 days, the stock moved sideways, slightly decreasing by 0.8% and with a ceiling of around $24. Nevertheless, it seems that the share price is now beyond the critical level of $20 that Palantir had so much difficulty going through. In the big picture, Palantir is now trading near its 2021 level, which is definitely a very positive move to consider now, given how low its share price went at some point. I definitely remember the days when it was below $10. I think it went even below $7. And then people were like, you know what, this company is so done and whatnot. Sometimes just to have fun, I like to go back and watch the old videos of Tom Nash just to see how, sometimes how much the YouTubers would like to ride the tidal waves. For me personally, and I guess it doesn't hurt to be honest here, very often I cover stocks, not necessarily because I'm going all in, but because I'm seeing that there is an uptick in the interest. So chances are, if you're watching this, is because you have heard about Palantir and you want to see whether there's any opportunities behind it, which is very valid, which is normal. So I personally believe that there are, but at the same time, you have to remember that this stock is one of the more popular ones in the market, and it is there for a reason. And sometimes popularity has a specific price tag to it. It's not necessarily linked 100% to the capacity of that stock to make you money, right? But you're also paying to be part of the hype, so to speak. Palantir recently had a trading volume of 46 million shares, significantly below its average of 110 million shares. This may suggest that the market has now priced in a good chunk of the existing positive catalysts and are now actively taking profit from the existing stock price action. It should be expected that Palantir may start pulling back a bit going forward, given the historically high Nasdaq level and uncertainties surrounding the economy. The trading volume is an important factor to consider for sure, because it shows you how many shares are being traded, even though the recent volume is slightly lower than usual, or in this case, a lot lower than usual. It may still indicate ongoing interest on the stock. Like, for example, yes, relatively speaking, it's down by half and then some. But at the same time, we're talking about like more than 40 million shares traded. And in a past that's not so long ago, it used to be a lot lower. I remember that used to be in the lower millions, to give you like an idea of how far Palantir came from. So understanding the volume is a key in trading any stock. If the prices go up or down with high volumes, it shows strong investor anticipation and supports the legitimacy of that trend. On the flip side, low volume during price movements may mean a lack of commitment during traders, or it just means that traders want to take a break, casting some doubt on the sustainability on the current run. So traders definitely use volume alongside the price action itself to make smart decisions and improve the accuracy of their strategies. Palantir is catching the eye of everyday traders like you and I for a few very simple reasons. It's perceived as a potentially high growth stock, a very successful business model with minimal dilution that can be foreseen. So let's take a look at the needs and the challenges of like regular investors to get a fair understanding of where Palantir stands in the grand scheme of things. People like you and I, regular retail investors, we often look for stocks that can go a very long way up, and Palantir seems to fit the bill in that regard. Its positive cash flow shows that it's financially stable and viable, making it a very attractive stock for everyday people who want to invest into ventures that are like, with a working business model. Like, we knew from very far back that Palantir has positive like gross margin. What this means is that the only issue is arguably just the scale of its operations, and that's before the AI craze, right? Palantir has been able to generate a very significant amount of the cash flows that they themselves need to keep the ship afloat. In other words, they don't always have to go back to us, the investors, for money. And this is very different from many companies in the Nasdaq. So there are, however, challenges as well that we have to face when trading Palantir. So one of them is that not everyone is tech savvy, and not every one of us have the tech know-how to research about Palantir. Like, for example, for most of us, we're kind of iffy about what does Palantir does exactly. Like, we know that it works with many government agencies. We know that it works with large entities. We know that its CEO sometimes does speeches or gives interview on CNBC and Bloomberg. But what does it actually do, right? Oh, by the way, to answer that question, they're basically into analytics, simply put. That they're into analytics, and the reason why people want to do business with them is because they don't mind negative news. They don't mind controversies. They also don't really care about like the micro, I don't know, like you know what I mean, like the Silicon Valley vibes, right? They have moved away, I think, to Denver, Colorado. So this is why Palantir is a bit apart from like the Silicon Valley snowflakes that you would otherwise see. Another factor to consider is Palantir's nature as a data analytics company, because they have ties with complex, controversial, and not always so appreciated institutions. Some wonder if, the hype around the stock may one day just suddenly fade away, and somehow people who have collectively, ignored the fact that they are basically just privatized intelligence agencies, they will suddenly realize that not only that is the case, but they're paying for this company to do that kind of stuff, right? And then the bubble would burst. Um, Considering the current state of the market, it's worth asking whether the excitement about around like AI will like eventually just fade away as well, because a lot of people have talked about like the rise of AI as a potential bubble. Like at some point, that thing is going to burst and it's going to make a lot of people very, very hurt and in deep losses, right? That should be regarded as a true potential. Now, given the current circumstances, patience is super, super important in the stock market, and regular investors might find it testing because we are like trained, um, like Pavlovian dogs, to go all in and to like go all in with margins on one single penny stock and then make or break. So, Palantir's long history of development shows us that it can handle challenges and its management can handle challenges, which is definitely positive news for investors who are looking at the companies that may be able to navigate difficulties. However, the real challenges are holding on to the investments for the long term, especially when the market gets unpredictable. So, the hype and speculation often influence retail investors, and Palantir is no exception. It's crucial for everyday investors to separate genuine value from market hype or pure market hype. When it comes to Palantir, it's a bit of both. It has the positive aspects, like its strong ties with public sector, um, how solid their cash flows are, or how predictable their cash flows are, right? Those are all like positive aspects. We also have to face the fact that Palantir does have its own issues. So the other side of the coin, really. And it is getting attention from retails, not necessarily because it's good or bad, but because of its potential for high growth. A successful business model and one with minimal dilution. Like by this point, I want to maybe give you another example. If you take another company, say Philip Morris, okay, like yeah, sure, they have good cash flows. They've been around for a long time. The yield is quite decent. However, if you look at its price action, I mean, I'm not sure how they can come back from this. You know what I mean? Or at least the last time when I took a look at it, that and also Western Union. Like, where do those companies go? Like, what's the place that they would have in the future? I'm not 100% sure. And this is why, for a lot of companies, it's not a given that, you know, just because they don't have negative news, it's all good news. Sometimes no news isn't good news. So, with all that being said, I would say that Palantir is definitely something that's worth looking into, and it's a company that we need to assess about the opportunities, like the growth, about how solid the business model is, as well as the risks tied to its reliance on the public sector, and also like different concerns about data privacy, data ownership, and also like. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So overall, my opinion on Palantir has since then changed somewhat regarding the immediate short-term future, from optimistic to cautious, because I am now kind of sort of anticipating a pullback and a lot of people wanting to take a break from the stock ascension. For the long term, however, I do believe that Palantir will definitely have its own place in the economy of tomorrow, and that its market cap will always be amongst the bigger players listed on the Nasdaq. The immediate recommendation is to maintain a position in Palantir, but to slow down the purchasing pace in anticipating the overall pullback in the short-term future, while maintaining like a bullish outlook for the long term.